today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 175, Nasdaq's up 53, S&P's off 6.5. Gold contract up $25, trading $18.64 an ounce. You got silver up 42 cents, $24.67. Both gold and silver, folks, going to have a confirmed ABC structure. Gold is like we're talking about 1910 or something. We'll go through that, but they got the bid. Oil is down 50 cents, 45.67. Notes and bonds. You get the 10-year note up 8 ticks, trading 137.20. 30-year bond up 22 at 172.11. And King dollar's up 61 ticks, trading 90.762. It's already basically lost price out here this morning, and good old King dollar wants to get down to this 88 level. The euro's at 121. The yen is at 104.06, and the British pound is at 133 to 1 U.S. dollar. Tom O'Brien, what's going on?
What's going on with that gold contract, man? It's catching quite a bid. We're $100 off of the lows we had. Was that just last week? When was it?
We're talking. It was. Yeah. And this is right off the bat, folks, okay, which is intriguing here. You know, it had to do with the dollar, no doubt. The bottom line is that the dollar had a little counter trend bounce this morning. It was up about 300 ticks, gave it up in spades. And this gold contract's in an ABC structure up. It's going to have the volume, man. You're blowing away. Let's see, you need 170,000 contracts. You already got 139. Silver's the same way. The GDX is an ABC structure up. They're all moving, man, and they're going to have it. Like if we go over to the GDX, it's up $1.23. You need volume of more than 21 million. We already get 5. So bottom line, it's on the move. And, you know, if we go over, it's about this dollar. You know, the dollar, folks, broke the 88 with conviction last week. Did a little counter trend bounce out there today. Now, the cool thing about where the dollar is, folks, is this. You can do a larger ABC structure, and you're at the 88 point. You do the smaller one from today, you're at the 88 point. So your probability gets much higher that that's where we're going to want to go. So it's going to be a wild one watching this shake out. And, you know, market-wise, you know, the NASDAQ is holding, no doubt. We'll see how that basically shakes out. Notes and bonds. Now, this is going to be really wild. The note and bond market, folks, they're the ever-ending battery, man. They just want to get back inside and go to higher price. This is a classic. So we came down to the strength, Tom, from the 12th when we came off that bottom.
Yep. You
came down with lighter volume, and now it's rejecting it. So now what you're looking for, folks, is that you're looking for a sign of strength. And, you know, as you said when you're on the show, Tom, we almost had hit 1%. We were
within 3 basis points. Yeah, there you go, 97.5. Cool. Yeah.
So, deviant markets.
And how about I'm always watching Apple, man. Just interesting in terms of, you know, you have the NASDAQ 100 up 61 points, but Apple, again, right out of the gates, man, it's up 1.6%, and you're up $2 from where we practically opened this equity. At a time when you're not seeing 2%, you know, across the board. Apple just continuing some strength here.
And you know what? Apple very well is going to be an ABC up. Look at this. So it's a small one, but it's not that small, actually. Hold on one second. You're blowing away 123. You need 78 million shares. You already get 22. So if I did 173, what's that? Man, I need new glasses. That's a big ABC. Hold it. No, not 173. Copy. No, 128. 112. Okay, so you get $14.
Yeah, $16.
Yeah, 16, and that's 121, 131, 137, man. Yeah. And that swing point up there is 125, 137. Oh, man, 137 is the highs. Okay, well, it looks like Apple's going to be ABC up, too. And if that's the case, then this NDX 100 will hold. Because, you know, it's up there today. Bottom line, you know, we'll see where it shakes out, man. It's a wild one. No doubt.
That's for sure. It sure is, man. I wake up every day. I'm always slightly amused, man. Volatility just sucked out of this market. As in the futures last night, they opened no real action. This morning, they're within 5 or 10 points. The market just creeps higher. It's like a rinse and repeat function right now.
It is. And now listen to this one, folks. This is sick. Tesla. Guess what? Listen, this is so crazy, it's insane.
I hadn't checked Tesla yet, which is a rarity for me, just for fun, to see. But go ahead.
And it's going to be close, folks, if it's an ABC up, okay? It just blew away its highs. Now, you need 63 million shares, and we only have 11 right now, 11.9. But if it's an ABC up, it's a monster. It's a 200 A to B, which would get you to 741. Is that
crazy,
sick?
right?
I know.
It is.
And you know what? I can imagine it. I mean, the market's thinking, 600's the number. Well, hey, why don't stretch it to 7? We have, what do we have, 11 days? 11, some 7. Yeah, 11 days.
Trading days? Is that what you're like?
It's not even trade days. We have 11 days to the 18th.
Yes.
The 18th is the number. They got to own it by the 18th because they got to own it on the open on the 21st. I think the 18th Friday, Saturday, Sunday. Yeah, that's how it's going to shake out. Because it's going to be in, well, I guess they could buy it Monday morning, too.
That's it. I think they have, I wonder what the exact legality of their functionability is there. Because I know that one of the articles I read said, that they don't go out more than a day or two max. But just the fact that they put it that way means they have some type of wiggle room. But I don't know how you make up. What do you do if like a day like today, you jump in a day early and you miss a 3.5% pop in Tesla within the first 42 minutes of trading, right?
It's heavy. Now, check out the other side of this, folks. Wait till you see this. Oh, this is sick. This is where, when I look at this is that,
I went over this morning on my show.
Bubblicious is like something else, man.
Did you catch my program? I'm just curious.
I did, but not this part. You did it at the beginning.
Go ahead.
Right?
I just didn't. I said don't touch this stock, and then I laughed, and I went over the volume. Go ahead. Tell the listeners what's going on with Kodak.
Kodak is up $5.83, and this is a company that. So what are they saying?
They said
Kodak
no unusual activity.
Press release wrote that the probe found no wrongdoing regarding the government loan. Well, what they didn't tell you, folks, is that they must have had the reporters must have been the investigators must have worked for Kodak or something, man.
I don't know what's going on, man, and how that comes out.
Seriously.
Because what I went over, and we'll do it again because I know it's amazing. It's already 2 hours almost from when I started. I'm entering the old symbol EK Kodak. So here's the daily chart of Kodak I have up here, okay? Can you tell on this chart when that news came out, okay? And what I went over was, we all talked about it at the time, there's no way that there's no hijinks, to put it lightly, if not just illegal insider trading, to put it bluntly. The daily volume on this equity was give or take 175,000, 199, 138. 2 days before the news, you did 80,000 for the entire day. And then the day of, prior to the news being released, you did 1.6 million shares. So when I say, who knows what's going to come out? If you want to take that risk that you figure out that tomorrow we're not going to get some more news, right? That, oh, wait a second, of course there was, so
and
be careful.
The stock only traded $2.30 before all this started.
Yes.
So why is it worth more money, right? Yeah.
Listen, there was hijinks. There was insider trading, period. We'll see.
Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now are down to 157. You get the NASDAQ up 46. S&Ps are off 5.5. And as we kick off another week, bottom line is that, I heard you, earnings this week. What do we have this week, Tom?
Yeah, they're still coming up. I had an article. Chewy, Costco, and Adobe.
Right. I heard that. Okay,
were the ones that jumped out at me. But it's a long list here, man. We're still in the season. You know, there's the big ones we all love. Broadcom is out here. Let me back it up real quick. But Stitch Fix, some of the Toll Brothers. That was one you'd be interested in for housing.
Yeah, you were talking about that. Yeah, right.
There we go.
Exactly.
And that's today. So Toll maybe after the bell, and then tomorrow we get Chewy. They're out with their numbers. What else do we got? Tuesday, AutoZone. That's always an interesting one. H&R Block. And then Wednesday, Adobe, Campbell's Soup. And then Thursday, Costco will be the highlight there. But we get Broadcom, Dave & Buster's, Play is their symbol on Thursday as well. Oracle. And then Friday, Johnson Outdoors. I'm not familiar, but that was the highlights of what we got going on this week as we kind of wind down that earnings season. I see you got Toll up there.
Yeah, this is going to be interesting, too, because what you had here on Friday, we're coming at this swing, and you got a wicked expansion of volume, man. So you got, let's see, 88 we hit. It was 60. That's an ABC up, man. What is that going to go down to? 48. $48, 52. That's interesting. So the high is 50.45. It looks like it's an ABC up to 52. Oh, look at this is all-time highs too. Oh boy. Okay, this will be interesting watching this shake out. So Toll Brothers, they're going to look for. Let's see what we're looking for here. They're looking for $2.1 billion and $1.24, and. So Toll Brothers, folks, okay, what's important to understand about Toll Brothers, their average price is much higher than the rest of these. Let me see what this is.
Okay.
Yeah, it's a big number, man. Oh, my God, look at average price is $870,000.
Is that expensive?
No. Yeah, I mean, that's intense, seriously. Man. That's intense.
That's quite an average. Whew.
I know, man. Think about that, right?
Now, you know what so we love numbers, man. You can do a lot with numbers. Instantly, my head goes, because I'm a data freak of sorts.
Yeah.
What's the median? because the average can be so skewed. If you sell one house versus, are they selling houses do they have any houses that are super expensive? Because that skews the whole average, right? You sell a few houses at 10, 15 million.
Not in the context of like 10 million, but what they have, which
you got an average of almost $1 million. They got to have some pricey. It's
yeah,
crazy.
No, they do. Where I think they have got hurt.
Here you go.
I've got hurt in the past, right? Is the
So there you go. Between 413 and 7.1. So traditional homes, there we go. So the traditional ones are 230 to 3 million. And then they have the quote unquote city living homes,
right,
which go from 413 to 7.1. And those sell for an average of 1.9.
Yeah. And what's going to happen? See this urban area, they moved into New York, so I can't see that doing good in New York. You know what I mean?
Right,
the bottom line is that we'll see where the whole
New
thing
York was already losing before COVID.
They were
something like 200 people a day.
I saw that,
and that's just talking about not population growth. That's taking births out of it, as in people who are leaving, etc. They had a net loss of a couple hundred people a day in New York City prior to COVID. So I can only imagine what it is now. Hey, I wanted to jump over real quick. You were talking about ABCs, right? What were we talking about in the beginning? Tesla. Oh, that's what made me think about it, right? So I talked about this in my newsletter over the weekend, and it's just pretty cool for those. Now, this is a chart of Disney and the power of ABCs and Fibonacci's, man.
Yeah.
And this is a chart from my newsletter back on July 14th.
Okay.
So check out the A to B, C to D, right?
Long. Oh my God.
It is. It's going back to like July,
crazy.
Man. 5-6 months almost. I know. Yeah. Crazy. I was going back over it myself because both Disney I love, Uber I love. I still love them in the long term. But some of these
big winners, man. I know.
Some of these equities, though, they've had quite the run. Now is going to be a time for maybe a consolidation, right? At least, or something like that. But pretty cool, the power of, and I always say in my newsletter, man, it's you try and Larry says it as well, man, you don't have to get so complicated. You don't need 50 different technical indicators. You keep it simple. I like Fibonacci's, I like volume, go figure. And I like ABCs, man. So this ABC here, going from the March lows to the highs we had in June, to the pullback. Now, the interesting thing here as well is that this pullback, on another chart is a 382.
Yeah.
I loved combining that as well.
That's right.
Okay.
That's confluence.
So the run you had from 81 to 127, you pull back a 382 to 108. You set up an ABC. That ABC, a $46 A to B leg. That from 108, it brings you to 154.75. And where did we get to on Friday, man? Within 7 pennies of that. A to B equals C to D. Pretty cool. And so what I said, we're holding this. We have it in our long-term portfolio. But I said to anybody, if you plan on getting out of this equity, right, in the next 6 months, this might be a good time, man. You just got a full $46 A to B, C to D extension. You're above where we were here. You're at all-time highs. We now have a period of time where the market is expecting all these things. It's time for that to be delivered in real life. So you're going to see these equities wait for the expectations to be delivered. But I thought that was so cool going through that. And then the other part, which I started looking at, Uber as well, man. We just got an identical move, as in if you go from the lows we had in March to the highs we had in June, you're talking about a $25 leg. It's about $25.07 to be exact. You add that to anywhere, and this one I had. This was going back after the fact, okay? But if you take a general idea, where do you put the C, right? You could put it here. You could be a little bit more conservative, and you could start the C to D leg maybe here, okay? You vary. It's an art, as we say.
Yeah.
But if you push it off somewhere near the lows, if you push it even, and, this is where maybe you put a linear regression line where it's going off, bouncing off $30. Well, if you put it to $30, man, you're up at about 55. Comparable moves, right? $25 here. You consolidate for an extended period of time, even if you don't call it a B to C, you just consolidate, then you move higher to the tune of about $25. That puts us right there. Same deal. All right. So you've seen moves in these equities, man, that when you make that type of a move, it's at least going to be a consolidation, especially when you combine the fundamentals, man, where both of these companies are in some serious pain still.
Oh, yeah.
Yeah. So now the market's saying we know the pain's going to end, so it's not going to move higher until that pain actually ends, which is 6-9 months or so. That's the take. But pretty cool when you look at those numbers. I just love how they give you easy points. And again, Uber, that's a 382. Right. So you combine, a 382 retracement, giving you a good entry. We already had a nice acceleration to the upside. You weren't trying to catch a falling knife down here, right? But pretty cool how you see those numbers line up, man. Just look for simple stuff. You look for volume. You look for Fibonacci numbers. You set your stops in there. And we've had some heck of a runs, man. But pretty cool how those lined up. I just wanted to share that, man.
It's huge. It's huge.
Yeah.
And we come back, folks. I'm gonna like the gold report. We bought an Eco Eagle this morning. I'm gonna show you why we bought it. So we're gonna line up exactly what Tommy just did, and then we're gonna throw one other thing in it. Just what ends up happening in the gold market. Fundamentally, I know it upside down. But
commodities,
also,
man. Yeah.
I also follow Fidelity, and when you see what Fidelity did on Friday, they bit. And when you see. I'll show you when we come back, man.
That's quite a teaser. They better stay tuned.
Because once they come in, man, they just come in like leaps and bounds. Dow Industrial's down 150, Nasdaq up 55, S&P's up 3.5. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charted software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now down 151. Nasdaq is up 54. S&P is up 3.5. And, folks, as you come over to our website at TFNN, it's a Monday. It's December 7th. And our man, Mr. Larry Pesavento, he is going to be doing a live trading webinar for everyone out here. Starts at 9 o'clock in the morning, goes to 2 o'clock in the afternoon. Bottom line, if you understand all the pattern recognition, how Larry comes in and out of equities, out of futures, all of the above, check it out. You can sign up. The full cost, folks, is only $295. And what that does include, that includes his newsletter for a full month. So it's a great educational deal. You can really get your head wrapped around this. Live trading all day long. So
it should be great, man. We've had some good signups already, and people who attended one of the prior 2 classes that Larry did, the live trading classes he's done this year, they get to go as well. I've got a bunch of thank you letters for those people. They're excited, so it should be a good turnout in there on Wednesday. A good community, a good crowd talking in the room, bouncing questions off Larry. And man, you want to talk about Fibonacci's, man. I've learned a lot from Larry myself over the years, some of those trades. So I encourage people to check it out, man, because he's one of the Fibonacci kings out there. And he does, man. He talked about this morning, simplicity of things. You don't need a million things, folks,
sure.
Fibonacci, volume, retracements, what it is. So I'm excited for Wednesday as well.
No doubt. And as you're there, so that's under featured content, folks. And the bottom line is that we're doing a holiday Tiger sale. So, bottom line, you want to save a little more money? Guess what? You can go get Tiger dollars, save money, get into it. If you have any subscriptions at TFNN, this is up to a 40% bonus. The way Tiger dollars work is that they have no expiration date, rather. They're good for all products at TFNN. They're totally transferable. In this case, you can buy 500 Tiger dollars, you get 600. You can buy 1,000, you get 1,300. You can buy 1,500. And that's the max, and you get 2,100. So it's a great way to save money, folks, with product at TFNN.
And the cool thing is, once you get them, man, you apply their Tiger dollars to your account, and they're automatically deducted. If you're on if you're on the Gold Report, or if you're on, the opening call, if you're on Fibonacci 24/7, you apply those once. All your forward transactions, they use all your Tiger dollars before we try and charge your card yet again automatically. So you don't have to do anything. You're signing up for workshops. Those credits are saved right in your account. So it's a great offer for current subscribers out there. I always encourage anybody who's a current subscriber, you should be out there buying Tiger dollars, man. We're all about, percentages, right? And profits and gains. Right. It is a huge percentage when you think about it. We love those BOGO sales at Publix, man, $5, and we're the happiest guys in town, but it all adds up, man.
I got A1 this weekend. A1 was on sale. Buy one, get one, save $5.75.
There you go, man. And, we'll round it out. We have the TAS profile scanner as well that you can sign up, save $100. That's only $97. That runs through this month. But you don't have to use them right away. You can get your Tiger dollars if you plan on signing up for some letters after the new year. We only do 2 of these really maximum a year. Right. So at best case, you'll see this sale maybe again in May or June, but not even that. Sometimes it's once a year. So I encourage people to check it out on the front page at TFNN.com.
Okay, so now let's do an Eco Eagle. So
perfect.
So check this out, folks. Okay, so let me give you some background first. When the Gold Report started like 2002. Picture this. No one wanted to own gold because we got in the gold market at $282.50. That was the first level. The only institution at all that owned any type of gold stocks was Fidelity. One. Imagine it. Just think about that. Okay. So now I'm going to fast forward. So what ended up happening anyway is that on State Street in Boston, okay, I was quite familiar with Fidelity, with State Street, with MFS, okay, and what happened is that when one goes in, all of them seem to go in and out, okay? So once these institutions start getting in the gold market, I watch them very closely because what happens particularly with Fidelity is that they're so big, when they're getting in, right, that move can go exponential. When they're getting out, that thing goes down like beyond belief, okay? So AEM, an Eco Eagle, okay, on the last run-up, let me just show you this, okay? So an Eco Eagle in general, okay, was one of the strongest gold stocks out there, okay? The bottom line is that when we go back to September, first week of September, the stock was trading $89, okay? The stock goes all the way down to $62. Now, what happens is that as this was coming back, it was just coming back into its breakout area. That, not just, okay, because that's a monster downdraft, okay? But the bottom line, it's coming back into its breakout area. It does it with lighter volume. So it got on my radar, and what ends up happening, folks, is that you can tag. I can tag Bloomberg. I can tag these different institutions so that when they're coming in, or if they do a filing, I'm aware of it, okay? So what ends up happening Friday is this. So picture, look at this chart. I mean, it's a beautiful looking chart. It comes down to like 62. And then what ends up happening, so watch this. This is sick. So Friday, I'm just finishing up the day, and I'm looking, and what pops up? Look at this, man. Fidelity already owned, it's more than 14 million. I'm going to show you how this works. They bought another 3.9 million on Friday, okay? So it's like, really? So now watch this. I'm going to change this. I'm just going to put the largest owners. And when you see this, it's sick. So what you want to pay attention to is the 9/11s, 9/30, those are the regular 13F filings. This is the one that's important, 12/4. Because once they go over 5%, they have to, every time they buy or sell, they have to file. Okay, and they have to file ASAP. Now watch this. These two top ones are Fidelity. These are all the funds. You get a small one here. Then I go to the next one. You go to the next one, you're going to see they're buying this thing hand over fist. Okay, so that was the method to the madness of buying it on the open today. Okay, now I want to show you just the opposite of this. Okay, which is pretty intense. They love Barrick Gold. Okay. And something to keep in mind with Fidelity, I do understand that their mantra saying long-term trade and all that. Fidelity trades so much it's unbelievable, especially in the gold market. So when you take a look at Barrick, right? Barrick has got smoked beyond belief, okay? And it really hasn't shown strength yet. And I'll show you why. Okay, so Barrick come down from $30, hit a low out here of 22. Now watch this. They have been unloading Barrick, and they have a monster position in Barrick. It's like, until they decide to start buying it again, it's a problem, man. Okay, see this right here? Friday, they sold another 6 million shares. They own 127 million.
Yeah.
Now watch this. I'm going to change this, okay? The first one is buy. The second one is sell. You can just see, there they are right there. The bottom line is that they're sellers. So it's pretty wild, when you basically start putting them together. And what happens at the gold market, folks, it's easier than the broad market because the sector is so small. Do you know what I'm saying? It's harder to do that in the bigger sectors. But once you're, in the gold market, there's really like 20 stocks that can go somewhere. You know what I mean?
Well, we got a caller with Harmony after this, so the phone lines are lighting up with all these gold equities, man. Perfect.
We better not get too many calls. For gold, that is.
I hear you.
Stay right there, folks. Tommy and I come right back. We have the Dow down 137, Nasdaq's up 57, S&Ps are down 3.5. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 143. NASDAQ is up 49. S&Ps are down 4. And just to finish, what I didn't mention, folks, AEM is going to be a confirmed ABC up to 75. It's blowing away the B point out here. You should get the volume. We need 1.2 million. No, 1.1 million, and we get 433,000 right now. So let's go to Dave in Boston. Hey, Dave, what's going on, brother?
Tommy, good morning. How you doing?
Doing great, man.
Morning,
Yourself?
Dave.
Well, I'm doing great, thank you. It just kind of popped up that you were talking about gold, and I'm wondering if it's a good omen. But with Harmony, I get your take on the dollar, and we're even getting the stimulus by the sounds of it. But with the dollar going down, does that help Harmony as much as it... or would it versus it going up?
No, it's just the opposite.
Just the opposite. I kind of thought so. Okay.
So let's go through this, because this is cool for folks to understand how this works. Okay. So what happens, folks, is this: Harmony and GFI. Okay. If you take a look at this, watch this. They were strong like bull. I mean, in a monster way. Okay. The bottom line is that the last run they went from $2.90 all the way up to $7. Okay. And that was just so when they topped out in July. If we go over, now watching you go over to the Rand, okay? Well, here, let me stay with Harmony for a second. So when you take a look at Harmony, you got to remember something, folks. The South African miners, right, their expenses are in Rand dollars. Their assets are in U.S. dollars. So what ends up happening, as the dollar had gone up, the Rand had got very weak. As it gets weak, like when they talk gold in South Africa, they always talk it in Rand dollars. And you can see the Rand right now, the Rand has just gone from a price point of 17 to 15. So the higher it goes, the more money that those gold companies make, because their expense ratio goes down so dramatically. Okay, it's called a gearing. So I'd be really careful with those right now, because if I'm right in the aspect of the dollar going down to 88, you are going to see this Rand probably get into, let's see. Yeah, the Rand will get into even 13. You know what I'm saying? So that's why you don't see the acceleration in GFI or Harmony. And you know, what's wild here, folks, because of the last time they were so powerful, you know, I can see people saying, okay, I want to get in there, but fundamentally it's going against them, man. You know, so.
Okay, that's actually what I was calling for. And so, I mean, once the dollar does bottom, you'd sort of almost anticipate the reverse of it to start, but it'll be a lot lower price-wise.
Well, maybe not, because this is what also happens. This is why this is tricky. Like, I wouldn't buy them right now, but this is where it gets tricky. The rand has never been so weak, okay? So those companies are still making money hand over fist, okay? So the correlation will be, I figure when we get to 88, right, that's going to stable out for a while. And it's the stability that investors are going to be looking for. You follow me? More than anything.
Right.
Because what does happen is that Harmony and GFI have millions of ounces in the ground, not hundreds of thousands. Now, they got to get down 8 miles to get them, but the bottom line is that they have so much more gold than everyone else, it's insane, except for Barrick.
Right.
Okay? So that's what you're kind of going against. I just wouldn't buy them just yet, because once that dollar keeps getting weaker, the rand will keep getting stronger. You know?
Right. But there's just better equities right now as far as gold is basically what you're saying.
That's correct. And what you want to wrap your head around, you really want to wrap your head around gold companies that are dealing in countries with just pure U.S. cash. Because here, watch this. We learned this in the last run-up. Well, I'm going way back now. I'm going back to the first run-up, actually. What had happened, folks, is that when the dollar went to 70, the large gold companies have always been in Canada. And no one could figure out, man, these large companies are not going up. Well, they weren't going up because the Canadian dollar ended up getting so strong that as our dollar goes down, the Canadian dollar gets stronger. Like the Canadian dollar just went from $1.36, now we're at $1.28. And what will end up happening with the Canadian dollar, and that's for Canadian companies, of course, the bottom line is it gets stronger, then they make less to the bottom line. Like the Canadian dollar looks like it's going to go to $1.20 to $1 US dollar. So,
right. No, it makes sense. I just wanted to, you're the man on it. So I thank you and Tommy for everything you do, and have a great holiday.
Hey, you're not going away yet. 1 second. And thank you. What's the weather like up there, man? Is it cold yet?
Well, I guess you can maybe call it a winter so far. It hasn't been up until just around the first, but, well,
that ain't bad.
It's New England, right?
No, I know. It's not bad, though. You get away with December 7th. That's good. Okay,
that's
cool.
Right. Well, it makes it easier for Santa Claus, right?
Hey, listen, you only get 3 or 4 more months to go, man.
There you go.
Okay, man.
I envy you guys down in the sunshine.
It's freezing out here today. It's only 70 degrees.
You know what it's about.
I know. Cooking, brother.
Anyways,
have a great
one. Have a great holiday. Thanks
again. Dave. You too, man.
Thanks.
Hey, how about platinum? We had a question over there in the YouTube Tigers Den about maybe platinum. What do they put it? Jumping off the lows or resisting the lows? I'll pull it back up. But
has it rejected
we'll stay
the
on the
lows?
metals. Reject the lows. Thank you.
And platinum has had quite a run, folks. And, this is wicked volatile out here today. There's no doubt. And it looks to me, okay, so platinum, folks, in a month has just gone from 849, hit a high out there on Friday of 1,098. It does, today it's like, okay, you rejected it. It has a lot of volume, though. I mean, what happens with a run like this, I mean, there's no reason that platinum really can't pull back to like 983 or something. You know what I'm saying? 1,046. Oh, this is interesting, though. 1,036. I see what he's talking about, or she's talking about. Yeah, that was the breakout area. So if you stay above that 1,036, man, you're going a lot higher. And my take on platinum is that it's on the run now. My take, folks, here, watch this. This is in the gold report today. So this is intense. If we go to the copper market, watch this. Copper is on a run. And my take on this whole thing is that we have started a new commodity bull. So copper's on a run and beyond belief, okay? We bring this back. Copper's in, a year? Yeah, not even a year. We've gone from 258 to 350. Iron ore, IRON, watch this. Iron ore is on an extraordinary run. You're at 963. And we were, just 2 months ago, you're at 750. And lumber. When you see something like this happen, it's about the dollar. And it's like, hey, guess what? The dollar goes down, commodity's going to be on a tear, man. And lumber's getting it back too. So lower dollar, higher commodities. Stay right there, folks. Come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is down 119. Nasdaq's up 56. S&Ps are up 2. And, Tom, when we start talking materials here, one of the tigers just turned us on to this equity, MP Materials. So this company, folks, this is a new IPO. Okay, they produce market rare earth specialty materials. The company's building fully integrated supply chain for high-strength permanent magnets for the electricity
electrification.
Thank you. And so lows 978. It went public at 10 in April. It's at 27. Okay. And this is getting traction, man. I mean, it's kind of dangerous up here, but it's an ABC up, man. It's blowing away a B point today, man. So it's like, okay, that's 24 is your B, 10 is your A. Your C is 60. That's 16. 18. That's 18. So the low of the $18. And what did I say? How big is the AB? I think it's 24. It's 14. 14 and 18. 32, right? That's what it's, yes. That's what it's shaking out. So, and this probably comes down to that play is interesting too, because that could come down to the aspect of not only the dollar, But then if it has anything to do with when rare minerals run, folks, okay, we've seen this before. That's what happens in commodities. They run, they're probably not worth it, but guess what? They can run 20 or 30 points in a heartbeat, man. It's wild.
Oh, and just, rare, China's been kind of cornering that market, man, and they're going to be super imperative for some of the things that we're going to be using tremendously in the future.
Right.
It looks like they had earnings on November 24th. I'm not sure. It's not showing up on the Thinkorswim platform like it usually does, but they got some upgrades too, but pretty cool. Definitely.
Yeah. Stay right there, folks. We get Thinkorswim coming up next. Now, man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Wow. Folks.